I have 6 stocks to talk about with you today. I am Dr. Stock, Doctor of Education, and slice up your potatoes, cook them in oil because it is Friday. All right, those 6 stocks that I have for you. That is a hard thing to say, by the way. Tesla, Nvidia, Apple, Johnson & Johnson, Enphase, and Sofi. That's right, we're going to talk about each of those in this video today. Dr. Stock, Patreon, check it out. My buys and sells, see how I'm playing this market, see how I'm profiting from the market. You can also check out my options course, which is a large way that I amplify my portfolio. That will also tell you how you can amplify your own portfolio, and then free stocks from Moomoo. You can get up to 16 of them. We'll talk about all that later. For right now, I want to get into the chart on Tesla. That's where we're going to begin this thing. So technical analysis breakdown and some commentary that we have. So let me pop Tesla up there for you, and you can see right here, looking at the daily chart, the bearish channel that we're currently trading in, and we tagged the bottom of it once. This yellow line that you have across here, that's the $200 mark. We are currently down below the 200-day, which is a bearish signal for us. We haven't gotten to a death cross, although we did come back up. We retested the 200, we got rejected, and we sold down below it. That could mean that there's further downside. 200 is going to be very firm support for us. Should we sell down below 200? That's where things start to get a little bit scary depending on how you play this. For me, being a long-term investor, for me, it's just cheaper shares, a better chance to dollar cost average and bring down my cost basis. Maybe you're in that same boat. If you're somebody who's trading this and you were hoping for it to go up, I know that's not a good thing. If you're somebody who went short on this and you want it to keep dropping, that can be a very good thing. And if you're in those margin type scenarios where you're holding on or where you're trading on the margin right now while the market's falling, that can be very slippery and dangerous. So be careful with that, because we absolutely don't want to see anybody blow up an account and get margin called. That can be very, very terrible. Happened to be back in 2013 when I was a new trader / investor, and we'll call it a rite of passage, if you will. So if you've been there, if it happens, there is a shining silvery light up ahead, shining golden light up ahead that you can check out. So Tesla, looking at this thing, looking for that bounce at 200. We were almost there before. As a matter of fact, where do we bottom out on this thing? 202.51. So we can see that we've actually had pretty historic support right around that 200 level coming in. Like I said, it is possible. We're significantly oversold when we look at the RSI on this. So for Tesla, in the pre-markets, by the way, we're right around 210. Where does that 200-day put us? That 200-day is up at 216. So we still have to go up about 3% from where we're at right now in order to see that upside. We have to solidly break it. Watch for that 50-day to start coming down this way. That could be that death cross, by the way. And now, mind you, the price drop will happen. That leads to the death cross. That is a lagging indicator, but is most definitely something that you want to watch for, possibly shaping up if this 50-day starts to really start to come down this way on us. And also breaking this trend line that I have here on the bottom of the channel, and then certainly breaking 200. It could be very scary for us. I think it takes market sentiment in order to do that. I think that it would take a hawkish Fed to do that, which we have next week. If we get higher inflation as the PCE report comes out at 8:30, this video is being recorded before that time. There's a lot of things. Geopolitical tensions, by the way, could also be something, especially if it impacts Tesla's ability to perform business or to conduct business in foreign countries. Those are other things that we have to watch out for. That could definitely be headwinds. But Tesla itself as a company, I think, has a lot of promise, and I don't think it's just with EVs. I think a lot of it's through its tech and its energy storage. Let's move on to Nvidia. Nvidia, if you've been listening to their earnings calls on tech, yes, we have the head and shoulders. Yes, we pretty much got down to that neckline and even retested this previous low that we had, 403. We actually went down to a low price of 403, but then when we closed, the low price was 398.80, but then we recovered and closed at 403. So the price that we had over here as a low price was the price that we had over here as a low price. That was a green candle that we rocketed back up off that. Sort of at a scary time as we watch this. Let's take this line, and instead of the neckline, we're going to drop it down to about 400 because I think that's going to be very firm support for us, much like what we had from Tesla. Now, the earnings reports that I referenced before, there's been talk from Google and also from Meta and also from Amazon about a huge infrastructure change and build out, and I think Nvidia is going to be at the heart of a lot of that. And I know that Google has their own thing with their TPUs, and I know that Amazon also is designing their own chips to go along with that, but I still think that Nvidia has a large place in this, especially because they're trying as hard as they can to meet the demand needs on the semiconductor section. So that could actually be good for semiconductors and any sort of wherever AI infrastructure, the actual physical devices are concerned. And I think the China headwinds are going to be somewhat canceled out by what we have here. Their earnings, by the way, I still believe November 18th. I'm going to have to check that. And it's not close enough yet for me to pay attention to that particular date, but it is coming. And I believe it's around the middle of November that we want to be watchful for that. And we want to start positioning ourselves, because even if we get a further sell-off from here, I think that just makes me more bullish on those earnings that come out. Now, mind you, I said before that Nvidia is in the market's hands, and it is possible that we just see that price continuing along those lines up until we get those earnings. And I think there's a high probability that we do have a run up in Nvidia's price by the time that we get close to those earnings, probably a week or two out from them. So that makes today and next week very critical for positioning ourselves if we're going to do that for Nvidia. Let's move over to Apple. Apple, super interesting chart as we look at this. So we came down and we've broken this top part of the trend line that we had, where most of the prices seem to find support. And then the heavy sells seems to put us right along this bottom white line that I have here as well. We broke down the 200-day on Apple, and I said over my Discord that we were down to about 165, and our low actually came down to the bottom of this trend line right at about 166 before we recovered slightly from that. Actually, our close was 166.89. Our low was 165.67. So we didn't quite get down to that 165-ish level, which would be right in between this trend line and the green line that I have here on the Fibonacci's. Apple, their earnings are November the 2nd after the market closes, and most likely, depending on what we get for market bias, if the market is able to recover by then. Now, mind you, we have the Fed meeting coming up November the 1st, so we're going to have to watch that because that can really weigh on the markets. And just a quick mention on the markets, I'll cover this more after the market closes today. I think that it is possible that we start off with some sort of depression early in the week in the market prices and the indices that we have for the SPY and the Qs. So that's something that we can most definitely see. Jerome Powell speaks. I think that we start to have recovery, that a lot of that fear is over, but we also do have jobs reports. So that would also assume that we'd have positive enough jobs reports with JOLTS coming along next week as we get into the beginning parts of November, that comes around strong enough in order to allow the market to recover. And when I say strong enough, I mean favorable enough is what I should say. That would give us a more dovish Fed along with whatever commentary we get from Jerome Powell. And I don't think that he's going to say anything that's like hyper concerning for us. I don't think there's a super hawk coming our way. If anything, maybe he makes some mention to GDP and the high numbers, the strength of the economy. But if we do end up hearing him come out as super hawkish, then that takes the markets from wherever they were at today. And I think it could possibly send us lower because we haven't seen ultimate pain as far as that goes, but we have gotten, in my opinion, pretty darn close, at least wherever the Fed is involved in that. And then we would just, ultimate pain would come through geopolitics, through escalated tensions, and then also through an actual change in the economic reports that actually shows us, such as weak GDP numbers and high unemployment and personal or inflation also going high. Like there's a lot of things there that can also impact that as well. So that's Apple's chart. Just a little bit of commentary on the markets. I do think that Apple has a recovery in its price that's quite possible leading up to those earnings. We do have to watch out for their device sales that we have. That's a big part of it. Apple services, they're raising prices. And let's hope that they, in those services, have enough pricing power to really turn out positively for the stock, that it actually has a sticky enough consumer base that we don't lose subscribers or subscriptions in that. So we're going to have to watch for Apple. Now, Johnson & Johnson, this one was brought to me by one of my followers in my comments that said, hey, check out Johnson & Johnson. And so for this one, not a company that I follow. So this is purely talking about the technicals of it. But as I looked at this, I went and I just took a quick peek at it and I was like, hey, like that is a descending wedge that we have taking place on Johnson & Johnson. I'm just going to draw it real fast because I do have to pay a little bit of attention at the time. But we have that descending wedge. And if we zoom way out, you can see the historic support that we're currently sitting at right now. And while there's still more room for this to drop down, we are significantly oversold. We have something that can show us that we're getting into a bullish reversal pattern. So I think that this is one most definitely to keep around, one to consider. And if you do follow it, there might be some brighter days coming in where we get a little bit of relief or maybe even a lot of relief coming in for Johnson & Johnson. So I think keep that around, watch for it because it could most definitely happen. Enphase reported their earnings and I think that their forward guidance got cut in half or so. And man, oh man, like this is some of the previous stuff. They've sold from their high about 78% from where they were at in their high down to where they are in the pre-market hours. Well, let's go down to the 4-hour chart so we can actually see that sale that we got from peak all the way to trough as we look at this. And if we go more recently, just to see where they've sold off since their previous peak that they've had, since things haven't been so great for them. We're still down 42%. That is a huge drop. So for Enphase, I think at some point things are going to be overdone. And I think that we're getting close to that point where things are overdone for Enphase. I think that this is one that you should most definitely watch for signs of reversal for this one, because when it does reverse, I think there's going to be some pretty good returns for us. It is highly interest rate sensitive. We want to watch for that. And we also want to watch for recovery in the European market, because that's a huge drag on Enphase. So as you start to suspect those things or see evidence of those things coming back around, Enphase's price should also come back around. Good company, experiencing a really bad time given outside factors, macroeconomic factors, and low demand for their solar technology with their inverters that they have. So that's most definitely something I'm going to show you. And I'm going to wrap things up here with Sofi. So when we look at Sofi, their earnings are on Monday, so need to be positioned by today if you're using options in order to get there. Otherwise, if you're going with shares, you're stuck with the pre-market on Monday before they put out any of their numbers and before they do their earnings call. So their earnings coming up. Lending is a huge part of that. So I got to say, as far as just the personal loans go, that could be pretty tight as far as credit standards go. But then also on top of that, they do push for high credit buyers, ones that would be very low risk buyers, very low risk of default, which is good because then they don't have to set as much money aside in safety for those defaults to come around. And then student loans, how much were they able to capitalize on student loan consolidation so far, just wrapping up at the end of Q3. And I think the bigger thing is the guidance that comes out for Q4. Not only do we want to hear about what they expect for the demand for their services and for their loans and for their technology platform, but bigger than that, I think, is the profitability that we're looking for. If they come out and say that they're still looking for going profitable by Q4, that's going to be huge for the stock, and we're going to get a run up in their price. Now, as far as today, I think it is possible we're back up over the $7 mark. I think it's possible that we do see a near-term rally in the price today. We'll see what the weekend brings for us, and there could also be a significant amount of hype that goes along with Monday. We got to pay attention to the market bias. We know it's been difficult. None of this is an easy call to make. All of it could end up being wrong because of any number of factors. But this is one that I do have calls out for that expired today, and that was a very small, very speculative move, but it should pay back handsomely to me if we get that pump that I expect. And then Monday, I also have calls out ready to go for that one. And we'll see if we get that run up in their price. I don't expect it to be like what we got last time, but should we see $8 out of this coming up on Monday, that would be a very, very significant move. And I think that that would be within the realm of possibility. So 750 to 8 if we get that bullish movement and if we get those strong earnings. And I expect that we get some excellent guidance coming out from Anthony Noto, the CEO of Sofi, when he speaks on Monday in those pre-market hours. So I told you how I'm positioned in that, and I tell you how I'm playing this market. And if you want to hear more about that or see my buys and sells, you can do that by joining my Patreon and come over to the Discord. That's where I put out the alerts about the things that I buy, the things that I sell. My community, by the way, is one of the biggest values that you get out of there. They are incredible people, very supportive, share a lot of ideas, very passionate, and we would love to have you as part of that. Also, my options course that I'm building out is over there, designed to take you from the very beginner levels, and as I develop it out, it will go through the advanced trading strategies, such as with the iron condor that I did to profit off of the Meta earnings, and what I did that I should profit off of the Amazon earnings as well. So that is most definitely something to watch for. And then I make those options trades through the Moomoo app, and you can get for 16 free stocks by getting that app using my link down in the description. Down here, the deposit levels you need to do. Here's the free stocks you get, including a free share of Sofi, and this offer does expire, so make sure you take advantage of it. Thank you guys for watching this video. I am Dr. Stock, Doctor of Education. Remember, my friends, that learning is earning, and we'll see you in the next video.